GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. Welcome back to the show, Gary.
Hey, thanks for having me on again, Jim.
So, do I really have you hanging on somewhere? Rock climbing?
Almost. We're going out later this afternoon, but I'm out in the middle of nowhere, Wyoming right now.
Gary, the Dow Industrials have hit all-time high. Can we expect that kind of performance to continue?
Well, the last time we talked, I said I thought that all the markets were going to go to new highs. I did not and had not thought that we were starting a bear market. I know a lot of people were thinking that over the last year, since it has taken so long for the markets to regain those all-time highs. But based on the cycles analysis, which is how I mostly trade, what we got was a 7-year cycle low, not necessarily a bear market. I was kind of hoping that 7-year cycle low would go a little deeper, but it went down to, I don't know, 1,800 around thereabouts, and then reversed. So I was pretty confident that was all we were going to get, and then the bull market would continue after a long consolidation phase. And yesterday that was confirmed when the S&P broke out to new highs. Like you said, the Dow's doing it again today, and I expect all the indexes will follow. And what I think is going to happen is over the next, I'm going to say 3 to 5 years, we're going to get a big continuation of the bull market eventually into another bubble phase, because that's what central bankers do. They keep interest rates too low, too long, and they print too much money, and ultimately it causes a bubble or a series of bubbles. So that's been the pattern for the last 16 years, so I don't know why that would continue. So I'm going to guess somewhere between 3 and 5 years from now, we'll have another bubble in the stock market, and then probably a bubble in gold that will follow that.
Gold was down today. Was that expected?
Well, it's due for to take a breather. It's had a strong push off that bottom, 5 weeks ago, I think it was, 5 or 6 weeks ago. We put in that intermediate cycle low at about, I think it was 1201, and we've had a very strong push all the way up to about 1381. So gold needs to just take a breather for a week or so and back off and regroup, and then I don't think that the intermediate cycle is done rallying by any means. Gold just needs to drop down into what I call a minor daily cycle low. It's just a corrected move, a minor profit-taking event. Once it's over, then we'll get another leg up. And I don't really have confirmation that that's what's happening yet, but I suspect it is, because the cycle is getting pretty mature. We're on day 29, so we're due for just a little correction, but I would caution people not to read more into it than what it is. It's just a minor profit-taking event, and when it's done, then gold will head towards 1,400, and I expect 15 to 1550 before this intermediate cycle tops, probably sometime in September or October.
What about silver? It seems to be enjoying a pretty profitable time.
Yeah, last time we talked, I said I kind of liked silver better than the other areas of the metal sector, simply because it it needed to catch up, and it's doing that. I do think at some point here, if gold is ready to move down into that little correction, that at some point silver will probably start to catch up on the downside, and we'll get one or two really big down days in silver. But again, I caution it's just a corrective move. It's not the end of the intermediate cycle, and of course the bull market is just getting started. We've got years left to go on the bull market in metals, and we'll have a bubble phase before it's over. Gold will go to $5,000 or $10,000. Who knows how high it'll go. Central banks have printed literally trillions and trillions of currency units, so that can drive these moves a long ways in all markets. And, the last few times we talked, I said that I thought everything would go up together because that has been the norm over the last 16 years, and that looks like what is happening. And once oil finishes its corrective move, then it will continue moving up along with everything else also.
One of the things that might be encouraging for oil is that SUV sales in China are skyrocketing. They're up almost 10% over the year, and China's government still plans to keep stockpiling oil as well. Is that encouraging in the oil sector?
Yeah, we talked about that, I think, the last time we were on also, and definitely. The world uses more oil every year, so I don't expect demand for oil to take any serious reversal to the downside, and if the economies in China and Europe start to improve, which I think they probably will, then that's just going to increase demand even more.
So many governments now have announced plans that they want to go to a sustainable energy program. It seems to me with so much oil around, it's pretty sustainable right now.
Yeah, eventually we'll work our way off of oil because there's only so much of it, but it's not going to be anything that happens quickly. We're going to be dependent on oil for 30, 40, 50 years still. We got a long time before we get off the oil addiction.
Plus, you do have to have sources of electricity if you're going to go into electric vehicles.
Yeah, it's going to take a long time to build out the infrastructure to where, we could have, electric-based car system to where, everybody is buying electric cars. It's going to take a long time to build out that infrastructure so that you can, drive across Wyoming and still fill your car up.
We'll have more with Gary Savage right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Gary Savage. Gary, how about consumable commodities, things like sugar and coffee right now?
Well, I'm of the opinion that everything, the entire commodity complex, the equities market, the gold market, everything put in a multi-year cycle low. Gold was ahead of everything else, which is typical. It kind of tends to sniff out the QE ahead of the other markets. So gold bottomed in December, but everything else bottomed, I believe it was the beginning of February, and that includes all the commodity markets. Now, there may be a few stragglers. I think maybe wheat and corn might be still trying to put in a bottom, but generally speaking, the CRB and the vast majority of the commodity markets all bottomed in February, and I think everything will go up for the next several years. So, in my opinion, you don't want to short anything for the next 3 to 5 years, other than maybe the U.S. dollar. But all markets are going to be going up, and they will have corrections along the way. But I'm going to suggest that rather than try and short something, if one particular asset starts to correct, like perhaps maybe gold is going to correct here for a week or two, just rotate your capital out of that market and into something that's going up, such as the U.S. stock market, which is breaking out to new highs. And there are so many shorts or bears that were convinced that we were starting a bear market, that this breakout could cause a lot of short covering as all those people and traders realize that they're on the wrong side of the market.
Why do you think so many people decided to go short?
Well, I think a lot of people are stuck in the memory of 2009. You can see it in a lot of the articles I read on the internet. The crash is right around the corner. The Dow's going to go down to 5,000. I see these articles all the time, and it's just simply that when you have an event like 1932 or you have an event like 2009, that makes a big impression on traders, and so they expect it to repeat. In 1932, that so damaged investor sentiment that many people could not trade. They never went back to the stock market, and they couldn't trade from the long side for years and years. And I think we've got something kind of similar that happened in 2009. A lot of traders just, the memory of 2009 is still fresh in their mind, and they cannot trade from the long side, and they've been looking for, the next crash right around the corner for 7 years now. And the exact opposite is what's going to happen. That is actually the fuel for this next leg up is all of these people that are expecting a bear market, and now that it's clear that this is not a bear market, it's continuation of the bull, you're going to get a lot of fuel for the upside, and I think we have a long ways to go. And I know this is going to sound unrealistic, but I suspect the Nasdaq will be above 20,000 within the next 3 to 5 years.
Yes, after so many people have been bitten the other time, is there a place where people would feel safer with their money than the U.S. equity market?
Well, I think the U.S. equity market is probably the safest place, because I think the Fed and the government is going to protect that market. I've seen multiple times over the last several years corrections get started, and then all of a sudden, kind of magically out of nowhere, the market will turn and just soar back in the other direction. Way before a normal daily cycle low would be due, or before sentiment really gets oversold. So I think the Fed has your back in the stock market, but I think the big gains are going to come in the metal sector and in the biotech sector. Now, I don't necessarily think that the Fed is going to protect either one of those sectors like it protects the stock market, but I also don't think that there's going to be suppression of the metals market anymore. I think the banking system wants oil. I think they would prefer to have oil back above $60, and so they're not going to try and beat down the gold market for fear that the rest of the commodity markets might follow it. So I don't think we have to worry about suppression of the gold market anymore. So I think those two markets are going to do your best, but those two markets are not going to be protected like the U.S. stock market will be. So you can make your decision on whether you want to be really safe or make the most money.
Do you think the U.S. dollar is probably at its all-time high?
I think it double topped at 100 last year. So I don't think the dollar is going back above 100. I think we've started another cyclical bear market. And they usually last about 7 to 8 years. That's what the last one did. So I really doubt that the dollar is going to go back above 100. I think we're going to start another bear market.
Gary, we really appreciate your time. I know you're on vacation, so that makes this a double bonus for our listeners.
Thanks for having me on, Jim.
My guest has been Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.